Hi, it's Jack here at System Trader, and in this video I'm going to tell you about some very interesting tool by Research Affiliates, which is called Asset Allocation, which can be found in the Tools menu, and here you see Asset Allocation. But let me just put a few more words about Research Affiliates. This is a huge company which is having over $170 billion under management, and also which is creating a lot of research regarding the asset allocation and the financial industry in general. And quite recently, I had a great pleasure to conduct an interview with Vitaly Kalesnik from Research Affiliates in London, where we were discussing the factor investing. I encourage you to see that episode. So let's get back to our tool, Asset Allocation. If you click on it and you are registered so that you can get the full access to that tool, you can see here the calculation of long-run expected returns, and also you have the view of historical returns. So let's start from the historical returns. And what you can see here is that on that side, you see the historical volatility, and here you see the real historical returns, which means above inflation. And for example, if you hover over that red dot, you see it's US large equities, and the real return per annum above inflation was 14.5%, which is a great result for the 10-year period, because you have that on average each year. You had that actually because that's already a history. On the other hand, you see emerging markets here, where you got 4.5%, which is significantly less what you could get from the American equities. But that's, of course, the history. And I think what is especially interesting for most of the investors is to see how the future may look like. And just a remark, this is just the forecast, which is calculated based on some models created by Research Affiliates. So please don't come back to me in 10 years' time and say, hello, you said that, I don't know, US American equities will return that, which is not true. And let's check what Research Affiliates says about the American equities, by the way. So as we said before, the last 10 years were magnificent for that market, whereas now US large equities are expected to have a negative real return, minus 0.9% per annum, which is really bad. Of course, this is just a forecast. We don't know what the future will bring to us. On the other hand, the emerging markets, they have 5.9% real return, which is much, much higher than what the American stocks are going to produce in the next 10 years. Of course, as I said, it's just a forecast. What is interesting about that tool is that you can create your own portfolio and see how it will perform, how it's expected to perform in the next 10 years. And for example, I created here a global 80-20 portfolio, which is 80% all country world index, global portfolio of equities, and also I put 20% of global aggregate. And that portfolio is going to produce 1.4% per annum in real terms, which is definitely worse what we could see in the last 10 years. But that's how, in general, the next 10 years are expected, at least by Research Affiliates in that model, in that tool. I just encourage you to play with that. And by the way, no matter what you will see here, I encourage you to create your own portfolio, your own strategy, and follow it. Because I think that this is very important, to have a plan which you follow rather than you are trying to focus what's going to happen in the future, because no one knows that. So I encourage you to just do your homework and be prepared, rather than think that what you can see here is absolutely guaranteed. No one can guarantee you that, but at least you can set your expectations on more realistic levels. So if you saw that American stocks were performing so greatly in the last 10 years, and if you would like to assume that that's going to happen in the next 10 years, quite likely it's not the best idea to do so. So I think that that tool can cool down a bit your emotions in that respect. Thank you very much for your time. Bye-bye.